Hey YouTube, back with another video for you guys today, and today I just wanted to talk to you guys about what's going on in the market. Right now we're at a very interesting fine line that we're walking right now in the market. We're going back and forth, pushing in on that 200-day moving average, and this is very important, guys, because we could very well and very likely see a potential bear market coming up very soon. But we can also see potentially a chilling down of the market, maybe a rise in the next coming weeks. But there was some stocks that I was interested in buying on this little bit of dip that we had this week, and some things that I wanted to talk to you guys as a whole. But the big consensus, or the big thing that I really wanted to talk to you guys about, is always keeping cash on hand in case we start entering a bear market, and what you can do to protect yourself over the long term. Now, if you're investing, and I always think it's really important to talk about risk management, because if you're believing that the the bull market is going to continue, you need to also think about the long-term prospects of a company. If it continues to go up like it continued back in 2017 or previous years, there could have been some really good stocks to buy for this year. Currently, we had a really big beat up in Facebook that I haven't seen in some time, and it had quite a bit of a drop, so that could have been a really good buying opportunity. And I kind of wanted to talk to you about some stocks that I think have potential long-term growth. Even if we entered a bear market eventually towards the rising next bull market that could happen, these companies I still think have potential to grow. So I wanted to talk to you guys about Facebook on some of the things that I think was an interesting buy in the market, potentially with a little bit of the fall right now, and a company that could have amazing earnings in the next coming years, or also really bad losses if some laws and regulations are put into place for advertising. But if we're looking for a buy the dip scenario, Facebook is a pretty good option. I don't think it's ever been this low for PE ratio since it's been around, because it just got to probably profitability not all that long ago, but it's also priced pretty high. However, the long-term growth potential of this company is also really huge. And I just wanted to kind of go over some of their financial statement for their income. For their gross profit, from 2015 to 2017, they've over doubled, which is quite amazing. That's massive growth. So this is why this stock has gone up so much over the past few years. As far as some of their financials and their earnings, as you can see right here on their quarterly revenue and earnings, from 2017 quarter one, they started off with 8 billion, and at the end of the year they ended with almost 13 billion with earnings of 4.27 billion dollars. This is massive exponential growth, and if this continues, this company will be absolutely much bigger than it is today. But it also is in a pretty bad predicament with what's going on with the selling of users' information for advertising. And I think that this could be a really important thing to watch out in the future. But I also kind of wanted to go under another scenario. Their balance sheet is pretty decent. It's relatively strong, with their assets way outnumbering their liabilities. So that's really important. So that's a really good thing to have. And their cash flow is actually quite nice too. As you can see, from 2015 to 2017, their cash flow has increased quite a bit. The company doesn't pay a dividend. As you know, it doesn't have any dividends paid, so that kind of sucks, but the company is still a high growth stock. So buying the dip scenario could be a very good opportunity to buy and make a large sum of money over the next few years. And I wanted to talk to you guys about Activision. This was a stock that took a little bit of a beating during the little bit of a dip, and it could see a decent long-term potential growth here in the next few years, and it could have been a really good buying scenario. We're currently in the bit of a choppy market, and it's very interesting to see how this will play out in the long run. We've hit the resistance point on the 200-day moving average, I think, 2 times, and it could be very close to either breaking through or start returning back to normal the stock market run up. So it's this very fine line that we're walking right now here in the stock market, but this was a potential buy for the long-term prospects of growth from the company. So I wanted to go over Activision Blizzard and where I think the company is going as a whole. Similar to Facebook, this could have been a pretty decent buy on 29 2018. Why I think that it could have been a good buying opportunity. So on the gross profit, as you can see, this company has had pretty decent run up for gross profit, not quite as good as Facebook's. And some of the things for the company as a whole have slumped a little bit, and I think it might be a little bit overpriced. However, I also see that potentially through this year, Activision Blizzard is going to be making a couple new games, or at least some new announcements, which will be really good for long-term prospects of the company as a whole. Diablo 4 might be coming out, and or at least in development. As you can see, the research and development for the company has got quite a bit higher every single year, and I think there's a lot of long-term prospects. Also, there's going to be a launch of the new WoW expansion, which is going to be also probably a good amount of money is going to be poured into that because a lot of people like the game as a whole, and it has a really good kind of cash cow business model. So the company has been doing pretty well over the past few years. As you can see, in 2017, the earnings slumped a little bit, but the revenue is still there. So they might have been doing some investments, or they might have been doing some other things with their money, which, as you can see, they did quite a bit in research and development. But I just wanted to talk to you guys about this stock and why I think it could be a potential buy. As we look further deeper into the stock as a whole, I kind of wanted to go look at their balance sheet. So let's go a little bit deeper into the stock, and as we can see that the total assets of the company is 18 billion something, I believe, and their liabilities are 9. So they have a lot more assets versus liabilities, which is always good. Also wanted to go and look into the cash flow of the company. As you can see, year over year, they've had better cash flow, yet in 2017, they had a bit of a slump. So this could be something that's looking forward, and a stock that might not do amazing this year, but I think it still has a long-term prospect of being a really good investment over a long term. They also pay a small dividend. As you can see, they're ramping up their amounts paid in dividend. And I think the company has a really good and long-term potential play in esports. As some people are aware, Overwatch, I think, is a really popular game, and they have a lot of other good games that a lot of people like to play. So the gaming community and gaming as a whole has really increased over the past 10 to 20 years, and I wouldn't be surprised in the next 30 to 40 years that there will be a lot more gamers than we have today, and virtual kind of activities will become, and augmented realities will be a lot different than what we have currently in today's market. So this is a long-term play with this stock, and I really thought it was a good buy on the potential dip that we've seen in the stock recently. As you can see, let's go back to the chart and let's see what's happened with the stock. As you can see, it had a high run-up back in January, where it hit $75. Now it's down to $67 a share. Over the long term, I mean, obviously it would have been better to buy during these points for this company, and back in 2008 would have been a perfect time to buy into this company. But this is why you have cash sitting on the side, just in case if this market was to take a correction and the stock fell down to $30 a share, then you could probably make a really good return in the next 10 to 20 years. And that's why we always have money sitting on the side. So I only bought a few shares of this company just because its price to earnings ratio is also really high, and I think it has a lot of long-term potential, but it was a small buy on the dip, and if it dips lower, then I'm not going to get too burnt about losing a whole lot of money because I didn't buy a large sum of shares. And And thank you very much for watching my videos. I hope you like my videos today. It was a little bit different than what I normally do. Subscribe if you like my videos. If you didn't like my videos, put a dislike. And if you really like, please hit a like. Thank you very much and have a great day.